Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Right now we have a U.S. Tech. We had U.S. Tech. It was just about 15 minutes ago, and it's on an uptrend. I've got this on a 15-minute chart right now. Let's put it on a 5-minute chart. We do have this little zone right here, and we'll see if we can get through this zone. But right now, I did take it on the 15-minute. There is a little room to the upside, and so I'm going to. I did put that one on. British CAD is the next one that we have looking at. The Aussie, for those of you who are maybe looking at the Euro-Aussie pair, that has a strong move down last night. It is starting to retrace a little bit and get back some of the draw or the down move, retracing some of it to see what it's going to do. But it's looks like it may have bottomed out for at least temporarily anyway. The British CAD, we're going to be looking at that one. And we can see, we're going to go and look at our scroll in, see where the direction of the trend is. Right now, it looks like it's in a downtrend. We are below the 200 moving average. It is breaking in between the arrow moving average. So we're going to put an arrow on let's readjust our charts to load up the new template. And this is the overnight move. I've been paying a little bit more attention to these overnight wicks before the money zone. And you can see right now we have a red zone above, we have a green zone below. It is in a downtrend with an up arrow. There's no trade on this one. My up arrow or my down arrow, I want it on this one. Here's our zone. It's coming, it says right into the zone. It is making a move up towards the 200 moving average. We'll see if it can take out this zone in the process. If it does, we'll see what it may start looking at a little bit of a trend reversal, but right now it's no trade on that. Euro British, we'll take a look at that one. That was an earlier alert. And pretty much the same thing. It's in an uptrend, down arrow, hit the green zone, no trade on that. And we'll can adjust our money zone areas where we have, again, the overnight range. You look at the bodies of the candles, high and low, before the money zone, and then looking to see if it get a breakout from that area. So I'm going to put this up. And we'll put, we're going to do about 90, start with 86.41. And 80.8620, 12.1, just to get it on the board. In fact, it's has an up arrow. I'm going to put this at the top of the candles in the overnight session. Put this at the bottom of the candle wicks or of the candle bodies before the money zone. And we can see actually it is starting to break out the bottom, but I still we're right into this green zone, so I'm not going to take that trade. Any other questions about that? Let's see. If you have any questions, put them in the question answer box. We'll be more apt to see them. That we can keep a better handle on the questions that you guys may be having. We had a Euro US earlier. We'll take a look at that one. See if anything's changed there. And you can see we're in a downtrend. We'll put the arrow on the downtrend. Down arrow, put right here by the lowest red zone. We have an up arrow and a downtrend. And nice move down. This is actually a little bit of a pullback. I'd be waiting to see if it comes back and give us a down arrow. Again, we're going to mark the bodies of the candles in the overnight session. This is here's the day break. Here's the overnight session, and here's where the money zone starts. And these two lines over here are our contra trend zones. We're not quite there yet. That starts at 8 o'clock to 10 o'clock East Coast time. And we can keep an eye on that. It looks like I didn't have my time set very well on that US tech. Looks like that one's already stopped me out there. Let's take a look and see what happened. I should have had a $10 stop. I may not have had a $10 stop on that. The entry was about 13,269, so it should have been stopped at 59. Yeah, it took the $10 stop. Just barely. Let's see. We had let's go back to our 5-minute chart. We should be taking these on the 5-minute chart. We'll see if we get an up arrow with this. We do have 2 arrows right now. If we can break through this zone, we have this little candle right here as a target. I do like this area right in here. Looking at this strong move down, came back up, tested it. Right now it's trying to break through. This one just got stopped out. And now it's starting to move in the right direction. That happens. Any other questions?
You got stopped out on that one, did you?
Yeah, I think I may have just had my stop too. Well, don't think I had too tight. I gave the 10 pips or $10 move, and at 59, it came right down to 50. Let's see, where was this thing? How far did it go down? Went right down to 53, so just barely took me out. There was a possibility to maybe try and get back in again, but I hate to chase these things.
Yeah.
If it does break through this red zone, which it looks like it's going to, you still have enough room to the upside. And so I took that trade. I got the alert on the 15-minute chart. Actually, I probably didn't get that good of an entry on it. Yeah, actually, the entry on the 15-minute was at 51. So actually, my stop should have been at 41. That's what you call a trading error.
It should be on the 5-minute too.
And it should be on the 5-minute.
Yeah.
So,
actually, Philip says there's a US CAD on the 1 hour. Have a look.
US CAD on the 1 hour. We're talking about swing trade on that one.
While we're waiting for alerts.
Yeah, we can take a look at it. Before I do that, I want to double check. There's a British CAD. Let me just take the British CAD real quick.
Yeah, it's a.
That's right in the down zone, up arrow. Yeah, we already looked at that one.
Yeah.
And the other one was US CAD. Is that what it was?
US CAD on the 1 hour. Yeah.
US CAD on the 1 hour. I'm going to put it on the 1 hour. Down move. Let's see the direction here. Zoom out. See how many red zones and green zones. We have 1, 2, 3, 4 red zones. 1 green zone down below. Looks like it's a downtrend. This is where the top of the zone is. We had the bounce arrow. Now this is not a bounce arrow go because it came back up and didn't bounce off of the zone. Had an up move. And right now it's coming right down into this 200 moving average, and I don't like that idea. I would not take this one short. I would want to see it get through this 200 moving average before I would take it short. If it does break through that, then you have a lot of room to the downside. But you'll probably you can see where you got to bounce off this already. It's coming back down to retest that. And you are still somewhat, the fact that your blue arrow moving average is in an upward trend. This is a strong move up. I look at this more of a retracement. This is a strong move. Came back down, retracing it. If you look, I'll draw Fibonacci on this one.
Kind of looks like an M is forming.
Yeah, yeah, I can see that.
So it might actually go, once it gets through, like you said, the 200 moving average.
Yeah, I think but right now here's the first leg of the M. Well, here's the first leg of the M coming up. Here's the middle of the M coming back. Now you have this trend line over here. And we like to see that right shoulder of the M being lower than the left shoulder of the M. But I said, I want to see it get through this moving average and start seeing this thing curling down. Right now, the 200 is going kind of flat. So there's obviously is finding some buyers coming in right in this area. Once it can get through that area, and right now the retracement we're right at the 38% retracement. And it looks to me like it's usually with the 38% retracement, you're going to be more up to come up and retest the upper part of this thing. This is a pretty shallow. I like to see this shoulder of the M be up a little bit higher than that. I would stay away from this one. I would not. Again, I have to see this thing get through this moving average here before I would take it short. And then I'd be looking at probably the 50 or the 62. I wouldn't be taking it all the way down here at this point. This is too strong of a move up without a retracement. This is the first move up. This is the first retracement. And this is right at the 38%. I'd like to see it come up and retest this area a little bit first. So I would not take that short right now. Put it back on the 15-minute chart and see how that, and you can see it's got a little zone right here. Right now it's range bound between this, you've got your major trend line coming on down, and then you also have a trend line from the bottom coming on up. And so right now it's somewhat range bound. I'd be more up to maybe look at taking a long down here and then short up in here. That would still give you plenty of room for profit, I'm pretty sure. This whole range is 48 pips. Could maybe, a lot of times you'll see it'll bounce, it'll go back to the mean. It'll come up, go back to the mean. Right here, this is the mean right in here. Came up, tested it. We have a little bit of a line right here that was, let me see if I can, there we go. You can see where you had, it broke, here's your line, broke it, tested it, broke it, bounced again, broke it, bounced again. Now it broke. I would expect this thing to come back and retest this area right in here.
We've got Dwayne is saying there's a Aussie Yen on the M15.
Aussie Yen on the 15. Where'd that one come from?
I don't know because I don't see any alerts on it. So I'm not sure what you're looking at, Dwayne. Maybe you can just let us know in the Q&A.
Let's see here. We'll zoom out. See how many we got. Looks like we are in an uptrend.
You're already in this, it looks like, Al.
Am I?
You are.
I am. Yes, I am. Still take a little heat on it right now,
that
but
was
not
good.
much.
It looks like that was a couple hours ago.
Yeah, this was a couple hours ago. Actually, I got into this when I sat down earlier this morning. Still working its way up there. We're in an uptrend. We had the arrow. I'm not a real big fan on these double arrow moves because a lot of times by the time you get the second arrow, it's already getting near the end of the move. We can go to the 5-minute chart. I believe that's one of the techniques that they use if you have the 2 arrows. But you can see it's already coming. It's already hitting off of a 5-minute zone right here. It's bouncing now. If we get a down arrow, it would be a contra trend, but we would be in the contra trend zone. But this was a strong overnight move. You can see where here was the daybreak. Here's the money zone. Here's where it broke through the top of the money zone. So this was actually the break right here. And that was right earlier. Oh, what time of day was that this morning? That was probably right around 12. That's about 5:15 this morning when that thing broke. That's a couple hours ago.
Yeah, by the time, that kind of time elapses, you've missed your move.
Mm-hmm.
There's really no point in looking
Yeah.
back.
But there was, like I said, there was an alert on the 15-minute. This was, let's see, what's the time on that one?
A couple hours ago as well.
That was at 13 minus 7, so that'd be about 6 o'clock this morning. Yeah.
Yeah. Okay, we've got a couple of questions for you.
Okay.
First off, Yoda is saying he likes how the trades look, but he's waiting on the news first. So maybe we can have a look at the news.
Oh, that's a good idea. Thank you for reminding us on that. Let's take a look at the Forex Factory. Today is March 2nd. I don't see, the only red folder I see is the Aussie at 7:30 tonight or today. So there's nothing much there. Let's take a look at the FX book, see if there's any news there. March 2nd, in 41 minutes, we have some Canadian news that says high impact gross domestic products on the CAD. So we're looking at pretty much all the Canadian right here. And let's see what else we have. It's coming up on 8 o'clock. So keep a note on some CAD trades, CAD pairs. Had some Euro pairs at 5 o'clock this morning. That's pretty much it for the news for the day, looks like.
So now Judson's asking you, with the major USD events in the calendar for tomorrow, are you planning to close out any of your US trades? If you have any, I guess at that.
Let's see for the major. Let's see what's tomorrow. What we have tomorrow.
Can you possibly share that screen with us so we can all kind of?
Oh shoot! I guess I wasn't sharing. I was looking. Thanks.
You're going blind here.
You keep me. Yeah, I forgot I had to switch the screens here. Yeah, here's the here's the one for today. I think this one for the day. Let's see, Tuesday. Yep. So at 2 o'clock this morning, we had some European stuff happen at 2 o'clock this morning. Right now, we're coming into that's 3 o'clock. So we're looking down here at the 8 o'clock is where we're at right now. Here's where the Canadian, that's at 8 o'clock. That's going to be in a few minutes, 39 minutes, about another 40 minutes. So be ready for that news. So take care of that one. And the rest of the day is pretty quiet until we get to 7 o'clock tonight with the Aussie. There's another high impact one. Look at the Forex Factory, and this really is only showing the Aussie at 7:30. It's not showing anything major even with the CAD at 8:30. It's not really showing anything. The FX book seems to put a little bit more emphasis on some of that stuff. And that's about all there is there.
And what about tomorrow? He's talking about
tomorrow.
There's a few US ones he's saying.
US on tomorrow. Nothing major that I'm seeing on this one for tomorrow.
Can you check out my FX books? You know how
let's see. I'll see if I can figure out how to change the time on the day tomorrow. Here we go.
Oh, there you go. You got CAD and US red folder.
Right here. Yep. Right here at 8 o'clock. So I'll be right about our time tomorrow morning. We'll have to pay attention to that one.
Mm-hmm.
And then later on in the morning at 10 o'clock, there's another one. Remember, this week is non-farm payroll report week, so we're going to have to be somewhat cautious about that.
But would you close down your trades if you're in any
I
US trades? Would you close them?
probably not. More than likely, I'll be out of them. If I take any trades today, more than likely I'll be out of them before then anyway. I rarely do I hold trades overnight. Occasionally I do, but for the most part, I'm usually in and out. Usually, if you're looking for a 20 pip move and you take that in the morning and like during the session in the morning, there's probably a really good chance that you'll be out of it before the end of the day. For the most part, it'll move. A lot of these pairs will move more than 20 pips in the course of a day. I mean, they look like about 10 pips an hour. So in a couple of hours, you would probably have the range on it that you would be looking for.
So now Dylan is asking, how is it that you're setting up your 200 moving average again? Can you
To set up the
just-
200 moving average, you come over here to your indicator. Well, see, you come over here to insert indicators, and over the indicators, you're going to be looking for the trend. I think it's the trend is the one. Yep, you go to basically go to insert indicators. When you get the drop down, come down here to where it says trend. And that opens up a drop down to moving average, and you click on the moving average. And the little window pops up. Set this for 200. I use the exponential. I'm pretty sure, I think that's what Nathan's using.
Yeah.
And I just make it, whatever, pick the color you want. I make mine violet just so I keep it separate from the others. And then all you do is click OK, and it's there in your chart. And once it's on the chart, if you go to your right click on your indicator list, and you should see it, it'll be right there. And then if you want to edit it, you can just click on it this way, click edit, and then you can edit it to whatever you want to change it if you want to change the value of it.
Okay, now we've got a question on the US Swiss. Is there a morning star on the 15-minute?
US Swiss, a morning star.
And the 15
It must be US Swiss.
There was, but it's pushing right up into resistance. You see that one doji there?
Oh, this one right here?
No, down to the right a little bit. The 4 candles.
Oh, this one.
Yeah.
This one right here.
Yeah.
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 No, I do like that for a wick.
Yeah. Yeah.
That's one of Nate's little deals that calls it. I mean, basically, I look at it as a nice little trend line here.
Yeah. It's one of the candle formations that he taught in the Fibonacci strategy 8.
Okay. Oh yeah, for when you get the Fibonacci retracement.
Yeah.
Yeah, and I do like here's your anchor, here's a hit, here's another hit, here's another attempting to hit it, it was rejected. And if you look at a Fibonacci retracement on this one, you can be looking at here's your low, here's your high for your Fibonacci, and you see it came down, it broke through the moving average, came down, wicked in, came down into the 62 area, between 62 and 79. So you'd want to put your stop 5 pips below the 79, then you'd be using the top of this as a target or the zone. In this case, you'd probably be looking at the zone first. But there's a good chance that if you have the momentum. Let's see US Swiss, let's see what kind of strength we have on the Swiss right now. Swiss is real weak. The dollar is almost as weak. But right now, the Swiss is the weakest currency of the pair. So if it's the weakest, that means you'd be looking this to the upside. And so, yeah, this could be a reasonable Fibonacci retracement. I say you want to put your stop. Let me get my stop to be right around the, let's see. Let's see if I can get a value on this Fibonacci. I'd like to get the value on the lines here if I can. Object. I don't know if this platform lets me do that or not. Seems to me I tried this before and I couldn't find it. Yeah, on some platforms you can actually get the value of these different levels. You can get the level percentage, and you also get the value. This one doesn't seem to allow me to do that. If somebody knows how, let me know. But right now we'd be looking at, let's see, we're going to be reload my template here. And let's see, we're going to look at the Fibonacci 9174. Let's just try and get some lines up here. Point 91. Let's just call it 655 here. Get my lines on the charts here so I can at least start moving them around here a little bit. Move that up here. That's 9186. And we would be looking at the Fibonacci stop area. So we're going to draw the Fibonacci again. We'll take it from this low right here to the top. Here's your pullback. My stop would be 5 pips below this spot right there. So that's, we're going to call that at 70. So we're going to put it at 9165. That would be your stop. And right now your target is at 9186. We're already at 82. So I'm not going to take that trade now, but that would have been a, this would have been the as a Fibonacci as a strategy with a Fibonacci retracement. You could have taken it with that candle when that closed up, and probably, I'm not sure exactly when he takes those. I would say after that candle, you probably take on the open of this first green candle. After that, that would have been your entry level. So I've been right about in this area. And that would have given you at 9172 and 86, so 72. Actually, 92 would have been your target. Now, and you could use the target of the top of the first of where the Fibonacci level was. That would be actually your target 1. And then target 2 would be, in fact, it pulled back to 62%. Your target 2 would be 38. Next one would be 51, 50, and then 62. So this would be your target 1, target 2, target 3, target 4 right there. I don't like the fact you have this zone right here.
Actually, Al, there's I'm reading something here from Angela in the Q&A that we can have a look at in a second. But I think this is probably going to be a good opportunity to let everybody know that because she's talking about, I'll read it out to you. I got a trade with the pound US last week, but with freezing issues was unable to apply my stops, currently down 50 pips. Would you just allow this to wash out over time rather than taking the loss? Now, I think it's a good idea if everybody would kind of on their phone download the MT4 app. You can, if your VPS freezes, you can log into your account on it and you can put in stops and you can put in take profits levels. Instead of just going blind and letting it do its own thing, there is a way that you can still continue to monitor what's going on. So if you guys don't know how to do that, let us know and we'll let you know.
Yeah, let me. This is a really good point, because when you're in trades, and I mean, yes, we've been having some VPS issues. I'm not sure if they're continuing or not, or if it's still a problem. But regardless of whether it is or isn't, you always want to try and have some means of a backup. And there's 2 ways of doing it. One is you can just put the app on your phone, so that way you can close it out on your phone and monitor on your phone. But just like you can put your account on your phone, you can put the account on a platform, a MT4 platform, which is not running on a VPS. The only difference will be is that you won't get the charting of the indicators and the alerts, but you'll still be able to manage your trades on a remote platform as long as it's all logged in. I mean, you log in just like you did log in with your account and your login password as you do on the VPS, you can still do that on download a MT4 platform from your broker, and you can just have that as a standalone, and you can still manage your trades. It'll still duplicate the trades that you have, but you're not going to have the confines of the VPS to be able to. I mean, you can still close them out. You can still open trades. In fact, that's what I do all the time. I have a separate account for one of my live accounts. When I take trades here, I just go to my other platform and I just take the trades, because I'm charting it with the charting on the VPS, but I can just go over and just click on the button, just like I do here, click on the button to take the trades and get in or get out of the trades. So just because your VPS locks up, there's no reason why you should have to be maintain a 50 pip drawdown. You can still chart it. You may not have again, you won't have the alerts, but you can still chart your patterns and your technical analysis. You can still do the same thing just on a standalone platform.
Yeah.
Does that help answer the question?
It does, and I'm having some more questions. So the first thing you guys need to do is go into your app store on your phone, whatever it may be, that where you get your stuff from, and get the MT4 app and get the TradingView app and download it onto your phone. Now, TradingView helps you out with your charting, so you can look at that and whatever. There's the free version, so that's not a big issue. But once you get the MT4 app, I'll write something up here and post it on how you can log into your accounts on your MT4 app. In the meantime, Angela would like you to still look at her GBP USD and see what you
see what we want to do about
really recommend. But
what are we going to do about the 50 pip drawdown? I guess is the question. GBP USD, and we'll keep an eye on that. But before we do that, let's take a look at this Euro New Zealand. Did we do that one? Euro New Zealand?
We have not.
No trade, Al.
No trade. Okay, thanks. I'm gonna turn that off. Okay. And this was the we're looking at the GBP. Which one? GBP USD is what we're looking at.
Yes.
For Angela. GBP USD. It's over here. And I'm assuming you're short with it. Is that correct?
She doesn't say.
And how long have we been in this trade? I guess that's the other question.
She said last week she got into it.
Oh, last week. So it's been a while here.
Are you long or short, Angela?
Yeah, let us know if you're long or short. We'll see where we're going to try and get out of it.
Long. She's long.
You're long? Okay, well, long. That's at least it's moving in the right direction right now. Euro, GBP, USD. Let me find it. Oh, chart for this one. Give me a second here.
Garvin's saying GBP pairs should have some push to the upside tomorrow after the finance minister announcement to spend £5 billion into the UK economy.
Well, let's see. Let's first take a look and see how this thing's going right now. See where I'll put this on a daily. Let me put it on a 1 hour chart and see if I can find out where the levels are. Okay, so here we go. You are long, so that's a good thing. It looks like you had some. I'm not sure where you got in it, but if you are long, so basically you took all this hit down here probably. If you're down 50 pips, that means you're down. Well, there's 100. That's 120. Wow. How'd you get only 50 pips? Depending where you got in, I guess. Well, anyway, long story short, right now I'm looking at this as being. Let's see, British GBP USD, British pound. Right now, the British pound is stronger. We are in somewhat of a downtrend here, though. We have making a low, strong move down, basing, making a low. It's actually retesting this area right up in here. So right now it's kind of range bound. I'm looking at this thing being range bound right now. It did break through the bottom. So we have this range right here. This was yesterday's range. It broke out our yesterday's range this morning. Boy, this is a tough one. Sort of like have a descending wedge right now, but it's trying to break out. I kind of like the idea that if it can break out the top of this wedge, I would be looking at maybe trying to, you'll probably find a little bit of a, if it can break out the top of this, I think you're going to be okay. I would not, since you've already held on to it this long, I would not, I would say if it closed, this thing could possibly come on up and retest this, maybe even go up higher. It had a strong move down all day yesterday. So basically this was the first day of the week, Monday. The low came in. Now the question is, it could come up and retest this area up here. You hate to, I would say, since you've already taken some heat now, I would hang on to it as a long. But if it breaks, if you get a break on the bottom, let's see if I can get this here. If we can get a break in the bottom, comes back up and retest this and breaks down. If it breaks the bottom and gives you that retest, there you go. If it breaks, if it breaks the bottom and comes back and retests, it's probably going to go lower. If it breaks the bottom and comes back up into the wedge, this could be your fake out, and then it could very possibly go up higher to retest here. So you have a couple scenarios. One, good chance you could get a head fake, and you may have already had that with. Let's see, we had a little bit of a wedge here. Here we had a low, a high, higher low, lower highs, came back, broke. This could have been this head fake right here that I often talk about, where it came down, retested the wedge. Now, right now it's sort of consolidating right in this area. If it breaks, I would say if it comes down and breaks further down, let's get that out of the way. Let me start this over again. We had the break. We're having the retest as we speak. And if it goes now, so it's retesting right now. So if it comes back down and breaks again, maybe you want to get out of it and then wait for another. But right now I'm looking to see if it can break through this blue trend line right here. There's a good chance it's going to come on up a little bit higher and retest this area. I don't know if this is answering your question. That's about the best read I have on it. It is in a downtrend. It is making new lows, but it's also trying to find this bottom here. If we look over to the left, let me take all this stuff off of this one. If we look over to the left, here's the low. This is the low where it's at right now. And you can see where this is a strong move up. So right now it's finding some buyers in this area. And so I kind of like the idea that this is our new demand zone. Came back down, it tested, came back down, and you also have a little bit of a divergence. You have a low here and a lower low here, but you also have a little bit of it's starting to pick up some strength on this last move down. I looked at this could be a shakeout. It's going to be a grind going up here, but I think right now, as long as this demand zone holds, and you've got a blue line right here. I like that one right here. As long as it can stay above 138.40, I still stay in it probably. It may come back and retest this. And if it depends, if I mean, you may want to come out and just take a small loss if it looks like it's starting to come back down and retest this area. But right now, I think it could have found its new home at the bottom, and it had such a strong move coming down. I mean, this was probably a couple hundred pips, I'm going to guess. Well, let's see, 300 looks like 300 pips. That's a pretty big move. It's time for a little bit of a retracement, but my crystal ball is a little foggy on this one. But I would say if you're already willing to accept a 50 pip hit, then I'd say just hang in there and see if you can maybe get out with a little bit better, a little bit less of a loss. That's about all I can say about that one.
Angela says, thank you. With UK news, we could see an uptrend, but we'll watch it for sure.
Yeah. But I wouldn't be real anxious to get out of it at this point. But you just have to expect how much are you willing to lose on this. I mean, right now it looks like it may have found a bottom, and you may want to be looking at maybe getting out here and see where it goes. But this could be your, you could be getting a little W in this area right in here. I kind of like this as a move down. So where's my W? I love this tool for drawing those W's and M's. Down, pulls up, comes back down. See the W. It could come down and retest this area, but then it could come on up and usually about 89%, or it could really just spike one up like that. This is gonna be the next area that's gonna probably give us some trouble to get up higher. But here's your W. And then once it can break this, then you can start getting these little V's that Nathan talks about, where you have the move up, get a V, move up higher, get another V, and then you start looking for where the M is. And like over here is your M. Here's a move up. Here's your middle of your M. Here's your second shoulder. And then it comes on down. So here's your M right here. And here's your A. Here's another A. Now it's starting to form the W. That's why I'm thinking this thing may have found its bottom. It could come back down and probably retest this to where from the B to the C area over here. That would not surprise me. But I'm suspecting this area might hold for you. If not, then I'd probably be getting out of it.
Michael says, hey, it's the batter butterfly thingy. Good morning.
Yes, the butterfly thingy. Yeah, so, and that's all I can say about that one here.
Okay, so I got a few more things for you.
Okay, all right. Well, it's kind of a slow.
We're not in short supply this morning.
It's a slow alert day today.
And you still have F bar to talk about, maybe before the end of the session.
Oh, the F bar. Oh, yeah, the F bar. Yeah.
I'll remind you again.
Thank you for reminding me about the F bar.
Ben says, I know it'll be heading into a zone, but is that a potential descending wedge forming on the Bitcoin US on the M15?
Bitcoin. I don't have it on my, I have to go to my other charts here.
Have it. But you can do it on TradingView, right?
Yeah, I can do it on TradingView. I can do the Bitcoin on TradingView. Let's see. Let me get Bitcoin.
Whether or not he's seeing a wedge or not forming.
So this is on, we're talking about Bitcoin now.
Yeah, BTC US.
Wait, well, we're just going to alert. Before I go to Bitcoin, let's take a look at this alert here. Aussie US.
Okay.
The first priority of the room is to see if we can catch alerts and catch it when they, Aussie US, when they come in.
Exactly.
And let's see what the trend is here. We'll zoom out. And looks like more green, but there's a big spread between the reds here. Wow, that's unusual. Usually, I say right now we're in an uptrend. Looks like this thing could possibly be a trade here. Let's see.
It's in an uptrend too. Perfect.
Yeah, let's see. Let me go to spread this thing out a little bit. We're in an uptrend. We have the crossover, and I actually kind of like this one. Let me just reset my chart here. Template, my template, load my template. It's a long way to a red zone here. I think we can take this one. Let's see. Here's the entry. Here's the 37 pips to the upside. We're through all moving averages.
Second arrow.
Second arrow. Let's go to a 5-minute chart and see if we got a zone there that's going to give us a problem. Thanks, CB. Yeah, I think when we get these second arrows, we're just going to have to go, ooh. Got to go look at these zones. If it
We
can
don't
break
have
through this,
to-
now let me see how my strength meter is on this one. This could make a big difference. Aussie US.
Aussie was really strong this morning.
It was it still is strong. I think I would be apt to take this one because Aussie is still it's the strongest one of the bunch. And so I think I'll take this one. So we have this buy at 77.98. Actually, 77.98. I'm just going to go ahead and buy this one right now. Get that in. Buy Aussie US. Buy. There it is. I'm going to put my stop and target in for starts just to get in the right direction. 40 pip stop, 20 pip target. Get that set. Now we can go ahead and play around with the lines here. And actually, if it can break through that top of that 5-minute zone, it probably could go up a lot higher. Let's see. Open trade. And yeah, this was at 77.98, so 0.7798. That's where the alert came in. So actually, it was at the bottom of this candle here. Now we're within, let's see, 98. We're within a couple pips of our entries of a couple pips. Not too bad. Target 77.98. So target would be 78.18. That's right there. And then we have our stop is going to be down at 0.78. Oops. 7758. 7. That's basically our range. So let's I see we do have strength of the Aussie is showing strength today. And there's our trade. So let's take a look and see if we can scrunch this up a little bit here. See, I do like this target up here. Actually, I mean, if you want to be real aggressive, you can move that target. You can move it up to the red zone. I usually like backing off a little bit. It has a room to the upside. Look over here to the left and see what the candles look like. Strong move down. This is a strong move down. So basically, there's pretty much clear sailing. Once it gets through there, I think your 20 pip target is a fairly safe target. You could maybe go for a little bit more if you choose to. I usually just go for the 20 pips. Let's take a look at this on the, well, that's our trade there. So let's see what happens. Give it room to breathe. And we were talking about the Bitcoin.
Yeah, Bitcoin.
What's the question about the Bitcoin again?
Oh, that it looks like a possible descending wedge on the 15.
Take some of these lines off, get this off. Descending wedge. Let's see. Well, right now it's this is the zone that's I'm looking at. Here's your low. There's your high. This is the playground it's playing in right now.
I can actually see the wedge, yeah.
This mid-range. This is our playground. We have a descending. So here's our wedge. We go from well, let's just do it this way, from low to high, to a higher low, to a lower high. Try and line up as many as we can. Here's the anchor. Here's a hit. Here's a hit. Right now it's playing right in this area. It's right now, it's pretty much right at the mid-range of this box. And let's see. Move this up to a little bit higher time frame. You can see it bounce right off this green zone, bounce right off the red zone, and it's somewhere in between here. One hour. I would say that right now this is going to be probably the next area, the 49.5 area. Right now, I'd say it's going to be trading pretty much in between this area right in here. So we basically have this zone up here. Call that supply. And we have this zone down here, we'd call it demand. Actually, I'm going to use the whole thing right there. This is the area that I'd say be looking at. It's going to come. I would expect it's going to get up to here today and may even go down as low as this today. But right now, this is the area that's playing in. Still pretty much in this range. It's right at the mid range right now of yesterday's. Actually, this wasn't yesterday's. This was the overnight high, overnight low is here. I don't know if that answers your question. That's my analysis of it, though.
Yeah. Judson says it looks like it's closing in on an old support line at 48682.
It's it's just such a volatile thing. It can go I think right now it's pretty much trading in between the 50,000 and the 47.5 area. Let's see, what else do we have here? Any other alerts?
Well, actually, one, I just heard one come through.
Oh, you did? Which one was it?
In a moment, I was just in the middle of answering a question. Oh, that's
Bitcoin. That was Bitcoin, but yeah, no trade.
Was Bitcoin?
No trade. Yeah, on the M5.
Okay, we've got Yoda saying there's a 1 hour arrow on Aussie Yen.
1 hour Aussie.
I got a question here. Do you consider that whole number to be a zone itself? Maybe one not graphically shown. I must have been one of the previous pairs that you were looking at. I'm not certain what you mean, Pepper, if you want to give us more info on that.
Let me check my times here to make sure I got everything on the right 15-minute. Okay, you say I'm still good for my 15-minute alerts, so let's see. Let me check the chat box here and see what we got.
Okay, so what Pepper was asking on the Aussie US, do you consider that whole number to be a zone itself? I guess you were looking at the Aussie US
If you get like a 78, like 0.7800, that is a whole number. And yeah, those are usually major bounce points. Those are definitely institutional levels. When you get to like the hundreds, the 50s, the quarters, there's a whole theory of the quarters theory. I use other numbers in between there. The thirds in between. A lot of that is what some of those other levels are. But yeah, anytime it gets to like a 7,800 or 6,900 or 1.20, something, anything with if you have four zeros behind the number, you can usually find that there's going to be some buyers or sellers coming in, and that's going to be a bounce point normally. Let's see, what else do we have here? No other alerts. Let's see how our trade's doing here. We have the Aussie US and Aussie Yen. Let's take a look at that.
Don't forget to save time for F-bar.
Oh, the F-bar. Yeah, for everybody, some people may or may not know this, but if you live in the United States and you have a foreign bank account like LCMFX, or I'm not. I think Envy would be considered that as well. I think they're all offshore accounts. If you have an offshore account, and if any time during the year, in this case during time of 2020, if you had $10,000 combined account size, even if you had like 3 accounts and the total of that account was more than $10,000, you're required to report that to the U.S. government. It's not a big deal. There is a form that you fill out. They don't charge you tax on it. They just want to know that you have it offshore. If you don't do it, you can take your chances. But if you don't do it, then if they find that you did not report it, they can and will oftentimes confiscate the funds in that account. So it's kind of important to, let me see if I can find out where I've got I'll try and remember to dig out the web link, and so we can at least show you where the form is. And I say if you have less than $10,000 combined anytime during last year, it's not a big deal. And you don't have to report until April 15th. So you would still have time if you have that. But I just want to make sure everybody at least is aware that there is a requirement if you're in the US that you have that requirement to do. And it's called F-bar, F-B-A-R. You can just Google it, look it up. See if I have it. I think I might have it handy here someplace.
Actually, Judson is saying if you fail to file the F-bar, they will fine you 50% of the account, then and taxes and penalties.
Yeah, yeah, they take it pretty seriously. I mean, I says they don't tax it. I mean, you are required to report it as income or losses if you have losses or income. There is a requirement. I mean, you could just, but as far as the reporting of it, they don't charge you for it. They don't. They only penalize you if you don't do it. It's not a big deal. It's just something that you kind of have to know about. A lot of people don't know about it. When I find the link, I'll put it in the chat box if I can find it. I have it buried in some of my files here someplace. I just ran across it the other day. Oh, let's see. I think I just found it. And this is what it looks like. Here's I'll put the link in here. I'll put the link in the chat box so everybody can. This is for all panelists and attendees. And we have it in the chat box, so you have it. But this is what it looks like. It tells you how to do it. It's not real complicated. It doesn't take a lot of time to do it. but they just want you to, basically all you're doing is you're saying you've got two or three accounts, and what the value is, you add them up, send it in, and they're happy with that. I'll keep this up here for right now for a second. But say if you don't live in the U.S., you don't have to worry about this. If you live in the U.S., you're kind of required to do it. And again, it's only if you have a total account balance of over $10,000. Yeah, let's see how's our trade doing here. Right now we're down a few pips, 23 pips total between the two trades. Still well within tolerance. Still, we have our 40 pip stops on here. And let's see. So this one is still a little bit underwater. It's coming. The fact we have this zone right here. This is on the. Which one am I looking at here? I can't see it. This is the Aussie Yen. Still have lots of room. My stop is below the arrow moving average. And we're still showing the Aussie strength. It's given up a little bit on the lower time frames, but still relatively strong. The yen is still relatively weak, so I still have good feeling about it breaking through the top here, at least breaking through this 5-minute zone. Or that's a 15-minute zone.
Aussie Yen and Aussie US are like identical looking charts right now.
Is it? Aussie Yen is a short. We'll see if we get a bounce arrow. If we get a bounce arrow go, we may want to reverse our position on this. But it is on the uptrend. It's in the contra trend zone. So things not playing very nicely this week. Let's see what it looks like on a lower time frame. Slight pullback on the lower time frame. I'm still okay with this trade long. And let's see the Aussie US, probably the same thing I think you said. Aussie's been really strong here overnight. Make sure we have the right direction. 3 zones below, we are in the contra trend zone. So I say as long as we can hang into it for at least a couple more hours, or at least another hour. What time is it? Another half an hour. 9 o'clock, so about another hour and a half. It should be okay. But we have our stop, we have our target in. We just trade the plan the trade. Or plan the trade the plan. Any other questions? Anything else we want to look at? Kind of a slow morning today. Take a look at this heat map and see what I'm talking about with the strength. The Aussie strong. It is giving it up a little bit. It just got on the 5-minute chart. It's just getting a little bit of a. I would consider this to be a pullback. As long as these are still relatively strong, I would view these as just pullback retracements. This one's still relatively strong. So here you see like the yen and the US are right in the middle of the pack right here, a little bit to the weaker side. So I still view this as a, both of those as a long trade.
Then in the chat could we have a look at the Euro GBP? What is it you would like to see, Brendan? Anything in particular? You guys have to be a little bit more specific so we know what you want us to have a look at.
We are in an uptrend. Going to my list. Let me just zoom in here a little bit more and see if make sure it hasn't changed any. Lots of green on the bottom, a little bit of green on the top. This is trading inside of a range. And the range is really between the 86, 66 and 86. So it's really trading inside less than a 40 pip range.
And he says he's waiting for an arrow on the 15-minute. Yeah,
Right. Yeah, it's somewhat range bound right now. It's sandwiched in between these two zones. So you would need to see a break. Pretty much need to see a break above this red zone. Then you got this area right up here that would be a nice little target for you. And this is all on the 15-minute chart. 87. Let me get the
Aussie yen on the 15-minute just had a zone pop up, Tyree is saying.
Okay, Aussie Yen.
Yeah, you're in that trade.
$15-minute Aussie Yen. I don't see a zone that just popped up.
Yeah.
I think there was a 5-minute. I think it was a 5-minute zone earlier, if I'm not mistaken. I think we were looking at a 5-minute zone that we were expecting it to break through. Well, this is one of those cases where you could stay in it. And the fact you have we've had this 5-minute zone, which wasn't it. We had the strength with the Aussie. It just wasn't able to break through that. So that would be a little bit of disconcerting. Let's take a look at this one in a micro sense. Aussie Yen. Let me pull this up.
83.43. Was that zone there when you got into it?
Well, there was a 5-minute zone there. I don't think the 15-minute zone was there.
Okay, but there's a 15-minute zone there now, I think.
Yeah, it certainly is now.
Yeah. So this would be the time to get out of it, would it not be? According
it would be a time to be considering taking it to not taking this anymore. Yeah. Let's take a look at it on the 1 minute on the let's dissect this one a little bit. Aussie Yen, Aussie Yen. Okay, so here's the Aussie Yen. We're long on it, so let's go and take a look at. Let's see where we're at. There is a little bit of downward pressure, but not so much that I'm overly concerned about it.
Philip says there's no zone on the 1 hour with arrow. So if you go higher, there's no zone in the way.
Yeah. We're looking. This was a strong move down. See, this was on the Thursday, Friday, yesterday. Today's Tuesday. do kind of like the fact, looks to me like there's still room to the upside on this. It is picking up on this little wick right in here. I still like this as a target, is 83.64. I like that as a upward target. It did break through this little, there was a drop, there was a little base drop. It did break through this area right here. So right now I think it's just sort of retesting this area. Kind of view this as a retest. This is on a higher time frame, but did break through that. And now it's got some wicks that's dealing with. Here's a wick, here's the next body right up in here. I would look at this as being the next target zone. Ugh. And we go to our 15-minute chart and see what it looks like on that. Strong move up, little basing, little retesting of this little that little wick over wick area. I'm not too worried about it right now. And see, we were looking at, what was our target on this? It was at our target was at 70. Let's see, Aussie Yen 83.61. Let's put that in there. $83.61, which is where our, right here's our target. And our entry was, we have find my cursor here. And the entry was at 83.34-ish. 83.43. $83.43 was right about in here is where we entered this trade. Just getting a little bit of a pullback on that, but I said right now it's just pulling back. If it comes into this zone, I'm not too worried about it. We should have our stoppers 83s. Our stop is right, should be right around in this area.
That's a gold alert came through, if you're interested.
Gold one came through.
Mm-hmm.
We're still okay with that Aussie Yen trade. Let's take a look at gold. And that should be on a 5-minute chart.
Yes.
And we have, I'm seeing, zoom out, lots of red on the top, green on the bottom. So we're in a downtrend. Change my template. And we're on a 5-minute chart. Didn't see any bounce off of this. No zone to bounce off of. We have a down arrow. We are in a downtrend. And it's bouncing right off of the 200 moving average. We have a little bit of a trend line. That would not be a seller at this point in time. I like the fact we had the crossover of the moving averages. It's bouncing off of this one. And I'd be more apt to be looking at it coming back up to this area. If it breaks through this wedge, we have the, say we have an anchor. Let me see if we can actually even have a third hit here. Here's the anchor, here's a hit, here's the another hit right about in here. If it gets, I want to see it break, come back up, retest it, and then come back down, and then use that for a target. I'd be looking at 1725-ish. And target would be somewhere around 1716-ish. And 17. Trying to get some lines here and we'll adjust them accordingly. Now with gold, again, it's a $5 target, $10 stop. The entry on this one would have been be right there at the 1726. So it'd be looking at 1721 would be a target. Let's see where that brings us. And then the stop would be at 1736. That's about the way this one's playing out. I said I wouldn't take this one short. I don't like the fact it's got this moving average here. It's in a downtrend. I like that part, but it's been hitting these. It's been in a slight upward trend. I'd want to see a break, retest to come back down to retest this area. In the meantime, I'd be looking at this thing to be more of a consolidation right now. I'm not a big fan on gold or the indexes right now anyway.
Well, Brendan's asking, could you teach more on the moving average, please?
The moving average, the 200 moving average is pretty much gives you the idea of where the direction is, and you can see it's kind of flat. As you have the arrow moving average, which is the blue one, when they cross, a lot of times you're going to see where it's going to come down and retest the 200 moving average. They'll use that for a bounce because it is in an upward trend. So when you get that bounce, and you can see where it bounced and it didn't close below it. So that gives me a little bit of an indication this is more of a bounce ready to go to back to the upside because it is in somewhat of an upward trend. And they said this crossover is important. And you can also see where it's making higher highs and higher lows all the way up. So you actually have what it's doing is actually ranging in a channel. If we take another trend line from, let's say, this point to up here, you can see where here's the, and actually maybe find an anchor back a little bit further back here. Let me see. What you do is you're trying to align as many of these points as you can without breaking through them. I kind of like it still like this. So you can actually probably use this little anchor point right here as an anchor. This was an area where it came back down, retested, couldn't come up to it. But this one, it was rejected right here, came back down to the bottom one, came up, rejected it, out to the middle of this channel, came back down, retested the bottom. So right now it's ranging in this expanding, especially it's an expanding channel is what it is. You have a low here. And so I would expect that if after this bounce, if it wants to come up and retest this trend line, we've got a nice little move to the upside, more so to the downside. But these moving averages are they're pretty critical. There's several moving averages that I like to use. I like to use a 62 is one of my more favorite ones on the individual time frames, and I do that on the trading view. Let's see, this was the gold. Let me see if I can show you that one. Here's my gold chart. And I'll go expand it here so I see where we're at. Oh, let's see. Now this one's showing a little bit more of a downtrend here. Let's go with a 15-minute. That's a little bit better. And this is a 62 moving average. You can see right now I've got 3 moving averages here. One's a 5, a 13, and a 62. And you see they're all crossed. They're all moving in the right direction. And you can see where it came back down. This pretty much equates to where that 62, where that 200 moving average was on the 15-minute chart. You can see where it bounced. But right now, all of our energy is moving to the upside. So these are bounce points. We've got the crossovers. And that's why I'm thinking this thing's still more of a upward trend than it is. You can see where you have the pivot points on the bottom. Here's a low, here's a hit, here's another hit. This says anchor, hit, hit. This is the 4th hit on this trend line. And so, but that's how the moving averages work. Basically, they are the average price of the close over a period of time on certain time frames. But this, again, I wouldn't want to take this one short, even though it had a down arrow and it had room to the downside. They had these moving averages were in the way. Anything else? We have about 2 more minutes before we shut this thing down, and we have the next session at 9 to 12 with I'm not sure who's running the session today. Matt may be running it today. Any other questions about? We're still in these trades. We're still, and we're taking it's 10 pips away, 10 pips down, but we have a 40 pip stop on both of them, so we're still good. And just hang in there with it. And if it starts moving against you in a significant way, then just get out of the trade. But right now, I still see them as a long trade.
And it's just probably a good thing to mention. I'm seeing some things in the chat and in the Q&A regarding alerts that came through like 2 and 3 and 4 hours ago. They're past their prime, guys. Like
Yeah.
at this point, it's too late to even bother waste your time looking into it.
Yeah. Usually, if you get the alert, and normally if you get the alert and it doesn't start doing what you want it to be doing within a couple hours, usually I would say on a 15-minute chart, I would give it at most 2 hours to start developing. If not, it's just range bound. It's not doing. If it doesn't make the move decisively in the direction you want, I would not be taking the trade. If you're in the trade, you stay with it. But I would not be taking an old alert that's 2 hours old.
Last question, Pepper's asking, how often do you take the full 40 stop loss, and how often do you close out your loss early?
How often? I don't really track how often I do. More often than not is, let's see, how should I say this? That's a really good question.
I guess each trade's on its own merit.
Yeah, every trade is pretty much runs on its own merit. If I see it coming down to a level and I believe that the level is going to hold, if my 40 pip stop is there, oftentimes I'll just let it take the stop. I really take a loss early, unless I see where it's bouncing. If I was seeing that I was looking at say a long position and it goes against me 10 or 20 pips, I don't really give it much thought. If it goes against me 30 pips, I look and see if there's a bounce point. Am I still protected with where my stop is? I would say more often than not, I just let it take the stop. If I see where it's making a major reversal, then I'll take it and I'll reverse positions. If I see that it looks like it's just reversing its direction, then I may just reverse position. But that's more of my technical analysis standpoint, more so than the arrow. If the arrow says to go long and I take the trade, I usually just let it take its stop. I'd say more often than not, it'll take a stop because usually I'm not going to sit and babysit it all day long. If I come close to the evening or the nighttime, especially at the end of the day, if it's anywhere close and it's still hanging in there, I may close it out early, but it's more often it'd be at the end of the day, just to so I don't have to worry about it, think about it overnight time. I find that I sleep a lot better if I don't have open trades open over the night. And so I just try to do all my trading during the daytime, and I try and be out of my trades by the time I go to bed at night. So, but each trade pretty much stands on its own. The technicals stand on its own, and I make the decision based on that. And sometimes if I'm really comfortable with the direction and it's going against me, a lot of times sometimes I'll take a hedge against it. So if I'm in a long position and it looks like it's going to be taking my stop, I still think the stop is at a bounce point, then I may just take a hedge where I'll take a short position. And when it gets to where near my stop is, I'll get out of my hedge. And then if it takes my stop, it takes it, but I also took in a little bit of profit in the process. So it cuts down the overall loss. And we can talk about that technique a little bit later on some point in time. And with that, it's 2 minutes before, so I'm going to shut this thing down and we'll see everybody tomorrow. Go and check out the 9 to 12 o'clock session and we'll see you then.